Radio Plus app, free for iPhone and Android devices.
Brian Jones, senior U.S. economist at Societe Generale in New York. Brian, good morning. Glad to have you with us. So we can talk about the numbers and debate whether they're skewed by the weather, but what are you going to be looking for as you dig deeper into the finer details?
Was interesting in the last 2 months' reports is while the job gains were, admittedly lackluster, the breadth of job increases across industries in the country, as measured by the diffusion indexes, were actually quite broad. Even in the last month's report, it was over 60%, and that's centered at 50, like an ISM measure. So, the way I look at it is what the inclement weather has done, or the colder temperatures, is it's not that people aren't willing to hire; they're ready to go. It's just that there was probably a fall off in demand that made them take their time.
Well, what do you expect to see in the area of participation in the labor market? We could see some influence from the expiration of those emergency unemployment benefits, right?
Well, we should have seen a little bit more in the last month's report. You may see maybe a little bit more in this morning's report, maybe a tenth or two higher as a result of it. But I think what we get with the household survey this morning is that the jobless rate, everything that we have in hand from the weekly jobless claims report, suggests that the rate's probably going to remain flat at 6.6.
Now, the Federal Reserve is undoubtedly doing the same parsing that the rest of us are. Is this still going to be too fuzzy for the Fed to consider any tweaking of monetary policy at this point?
No, I think they want to get out of the asset purchase business, and our own view here is that they continue to reduce their purchases by about $10 billion at each meeting. So at the meeting on the 19th, they'll probably announce another reduction to 55 billion.
All right, let's pause it right there. Hello, welcome in from Sunnyvale, California. I am Mark Vierra. This is my technical analysis video that is complimentary to my trading log. Go over some images, and you'll find all the images that I post over here in my trading log. YouTube users, there's links to all this stuff. Now, this is a fairly basic technical analysis, and get into volume profiles, and it's a little more advanced. But if you have no idea what I'm talking about, a good place to find information here is there's let me pause this a second. There's StockMarket how-to here off of HotStockMarket. There's click on this education. You start off with a basic trend line, and simple Google searches will give you lots of information on the internet. I go over just basic trend lines, some chart patterns, and I like to look at moving averages and fib numbers, and of course volume spread analysis, volume by time and price. I think give excellent clues on what the market's doing, what the psychology is behind that. So if technical analysis isn't for everyone, but if you have no idea what I'm talking about, then likely this video just it's not for you. In any case, for those of you that appreciate technical analysis, this is my take on what is going on in the market. Always like to start off with a SP 500 monthly chart, and we have just basic trend line going on, long-term chart. We have 1895 up here as a strong resistance, and very basic phenomenon. Previous market tops will find support. This would be the top of the flag. I think would be an ultimate stronger support. I think let's see, prices right here. We could most likely see some good strong support here, and 1895. Wow, boy, time flies when you're having fun. So let's see, that's the monthly chart. We'll take a quick look. Now I can almost just recycle this video from last week, because the pattern on tap for the past month or so has been just markup phase, consolidate, do a support bounce. Just a small ABC corrections, and I'll show you a chart of that here. First, let's get into weekly time frame. I have this blue pivot line, and just excellent reaction here. You know, we have the lower wick that dropped down below that, and we did a springboard up off of that blue support. That's not much else in the way of candlesticks. Let's see, what other weekly chart do I have? I got a better one here. Let's open that up. There we go. So, little trend line off of the tops here. Kind of try to catch as many of these bottoms and get somewhat of a channel wedge, rising, of course. I still have this line in here where we did a springboard action off of that. Top of the inverted head and shoulders. Can see a better view of that on the daily chart. And that's you know, just like last week. I'm not seeing much else different. Get into some lack of demand issues. We have lots of bullish chart patterns in play. Went over that in the last video, so I won't go over all the weekly chart patterns. But the flag is you know, a good one to look at here. A few weeks back, you know, I said we like to break out, do these fake out little, you know, the market operators want to fake you out, run down stops, and we broke our confirmation line a few weeks after that. And what was a strong bullish sign was that we did this test of the flag, the top of the flag here, and we springboarded up out of that. So previous tops is now a good support bottom, and that's just a phenomena. That's just one of your basic technical analysis phenomenon. Bottoms become tops, tops becomes bottoms. Yeah. All right, daily trend lines. I've got a wide lens view of the S&P upward trend channel, just to show you where these lines that I've drawn, and then next chart I have queued up here is just a zoomed in version of that, where I've added some lines. This is what I'm looking at here now, is the top of the inverted head and shoulder pattern, and I'm capturing these tops. So I have a basic, you know, broadening type of where I'm trying to find what the range is. So I'm going from this top and the previous week's top, and I'm slicing through to give me a median range. And so this would be our up, terrible lines. Anyway, this would be our upper range up in this area, and break below that would be our lower range. We'll get into what I think is going to precede that here in a minute. But this is just showing me, you know, a support pivot. Below that would be, you know, obvious. We would likely test the top of this, you know, which I think would be very bullish too. If we got a support off of this, I think we'll do a springboard, and that is the thesis this week. So we'll get into that. Let's see, Fibonacci extension. So I like to look at the Fibonacci extension numbers and price reaction. So we draw from low to highs, pullback, and then, you know, these Fib numbers are giving us price reaction to these numbers. I always see a strong reaction. This 50% became an excellent pivot. Did a little bounce action off and springboard up to the next Fibonacci support number is 1865. I think that's going to be a good number to come and play this week. And we'll get further into this plot. Let's take a look at... Always got to look at some moving averages. I like to look at moving averages, and what I've been waiting for is finally we're seeing some contraction here in our Bollinger Band, And last video I said we're getting pretty close to a little cross action there. Not that this really means anything, but it's just a lagging confirmation that sometimes I think my mind needs to see stuff like this. It just reaffirms what I should already know, of course. But yeah, I'm still going to be looking for a little drag. You know, that's what the modus operandi has been for these little small ABC corrections. Get into here in a minute. But you know, eventually I think we're going to see higher prices, and I will get into why. Let's close that up. So I have queued up here my S&P daily pattern worksheet here, where I just keep track of how the patterns are flowing and how the story is unfolding. And this gives you an excellent idea here. You know, we'll start off on how this inverted head and shoulder, these previous tops, okay, become strong support. And another chart I'll show you here in a minute is the ABC diving board, I'm calling it, where we moved up. This was last week's top. We came down and we just did this springboard off of it. And that's just kind of been the way this market's been working. Here we'll call this, you know, another, you know, this was a top, okay, that went down. Okay, and then we came back up. Here's another top, all right. So now we have a range in here, okay, which I have these blue lines drawn. We also have a right angle ascending and broadening pattern, okay, which a lot of times I like to say that these especially the broadening pattern, more so with the right angle descending and broadening, but they like to do a breakdown out of the pattern, and I believe that we will see support bounce off of, you know, if we hit this support, and I'll get into volume later, but one of the things I'm predicting is if we come down and test this support, we'll probably see a slow drag melt up, okay? But if we come down and we hit this stronger support, I believe we're going to see a strong springboard bounce, you know, into a new markup phase off of that. So let's see, anything else in patterns, broadening, ascending? You know, we have, you know, these indecision dojis right here in this inverted hammer, okay, and especially when I get to the SPY chart on volume, this is showing not only indecision, but just we're not getting a good demand here at these higher prices. So we have some no demand signs, and especially in the Friday candle here, this doji, we'll look at the volume behind that. You know, I always say the best for last. That volume is good stuff. But we'll see. Lack of demand at the higher prices. Let's see. Do we want to look at the flag? We looked at the weekly flag. Let's see. You know, same kind of thing. We don't need to look at the daily flag. What I want to show you here is this diving board thing, because this has been the latest modus operandi of the stock market for a while now. We'll have a nice firm top here, okay. You know, and price will break below that, and boom, you know, so you get a little springboard action down here, and that's sort of what I'm predicting off of this previous level. We break below that. I think we're going to see a nice springboard action off of that. We'll see if that plays out. That's you know, almost recycle this video from last week. I think that's what we're seeing in the stock market. You know, this isn't any different than the pattern worksheet. So let's get into some volume. Alright, let me queue up a few charts here. So I've got several studies involved here. Let me shrink myself out, and you know, of course I got volume by time down here, and I've got a little oscillator action going on here. This up here is volume by price. Okay, we can see the high volume node that is current support, And I also have volume spread analysis for dummies kind of in here. And it, you got low volume marked down here with these dojis, and that's marking a lack of demand indication in here. And then consequently we had this kind of bearish to end the week, and that's nothing really special, but it was on above a little bit, above average. This is our previous buying climax, so we're taking profit at the highs, or the buying climax, on a lot lower of volume involved than when selling climax. Now, the idea of a selling climax is institutions are buying into the weakness. So I'm seeing a lot more activity from institutional buying at the lower levels here. Of course, if you look at the long-term volume, it's really just the average is just is steadily falling. So and there's other explanations for that too. I don't want to get into any, too much of the fundamental analysis behind why volume is decreasing over the years, but it is, and it's just new normal. So just like in the pattern worksheet, this previous last week's top, I think will be a nice stiff support bottom. Support off of that, I think, is we're just going to see a low volume sideways small melt up, because you look at this indecision we had. It's going to take time, a correction in time rather than price, for demand to want to kick in at those higher prices, if at all. And the other, I have a yellow pivot here that's actually coinciding with that too, so that gives me a little bit more in terms of where I'm going to expect, not so much expect, but suspect support. The other thing too here is we have lower highs on our oscillator, as price is making higher highs, so that is a bearish divergence in the background too that I want to keep in the filing cabinet there. So the thesis is that if we support melt up from here, I think if we come down to this high volume node area here, all right, and that means we have to get through this low volume area is also coinciding with the previous tops. And low volume is just a lack of supply and demand. It's just a lack of interest involved in there. But now the previous top here, or the neckline, inverted head and shoulder, this is the neckline, previous top. I think if we consolidate down to that level, I think we'll see a stronger bounce. And so we'll likely see that springboard effect, right off the point of control. So that's my two scenarios that did it again. So you look at an hourly chart and really blow that up here. This would be the low volume area. I keep losing my pen. The low volume area would be that 186 support. Of course, we've got this pivot line here to deal with first, and this is your 10-day point of control that it would be a good support. I do believe we want to consolidate, judging from the daily chart here, but now I see increasing volume on the move up and decreasing volume on the move down. And here again, we're increasing on the hourly intraday time frame. We're still looking at some bullish volume. So I don't know how that's going to play in, but then now your 185, here's your high volume node down here. So this is kind of a blown up view of the daily and the whole thesis that I'm working towards here. We're either going to melt up off first support or springboard off of second support. That's kind of what I'm looking at. And so what else can I look at? I got some volume composites, but I'm not seeing anything different from last video. Well, we'll open up the monthly composite here. Take a look at that. So what I was looking for last week pretty much came about. Now we have a new monthly profile building up here, and this is our P-shaped composite. And I believe, if we do the melt-up part of the thesis, we're going to build, I think, a B. This would be a B shape. But I think more likely we'll develop an E shape if we lose, support in this area here. So we did start off with a higher initial balance. Here's this green line is how we started off the month. And I said it would likely encompass the previous month's point of control and take profit or time price opportunity. So I don't know, what can I say about the composite is it's coming along nicely. We've got a nice little bell curve forming up here for a P shape, but judging from the other volume charts I'm looking at, I do believe that we'll want to, here's where volume's starting to pick up down in this area. This previous area of volume is sort of what I'm looking at for support, just like what we just looked at in the daily charts. So what else can I say about volume? I don't think there's much else. I think weekly composite too, this gives you another view of the low volume area, and this lack of interest too is supportive, and that's this whole area in here. You're not going to find lots of supply and demand, but my prediction for the new weekly composite would be for the initial balance to open up the gate at that low volume area. So we'll see. I think we're going to have a little bit of a gap down to start the week, just like last week. I think we're going to see pretty much similar last week. Whether we get it all back by the end of the week is yet to be seen. So that's it with volume. Let's move on to some risk on and off here. We're always looking at U.S. Treasuries to gauge global concerns will flow into Treasuries. I also like to look at the Treasury yield. So on the weekly time frame, our Treasuries are looking bearish. We have this engulfing candle. So and it's not any kind of climax size yet. So I think the weekly is saying that there's more room for U.S. Treasuries to run lower. And on the daily time frame, cue that up, is looking bearish as well. We broke this pivot and the 3-month point of control. We're getting some support off this high volume node. We climb back up, but then we have this upward shadow, up thrust. I think and our volume isn't really showing any kind of downward climax, and judging from this to close the week with this up thrust, I think we're going to see some lower Treasury prices, which doesn't always necessarily mean that that's good for stocks. These correlations, inverse correlations, they come and go. I don't put too much into that. I do look at the correlation between the U.S. dollar differently, in terms of, it's not to me so much as a risk on and off, but it's a value thing. Value is something that you always have to think about. When I was younger, a gallon of gas was, under 50 cents. I don't expect to ever be able to go to the pump and get 50-cent gallon of gas any more than I expect, to pay less for stocks, commodities, goods, services. Everything goes up. So, and mirror image of the Treasuries here on the yield is a bullish engulfing, and there's plenty of room for this to go higher historically. This is where we saw stock market selling off at these upper levels. So, for intermediate term view, I am still bullish on stocks. I've been bullish on stocks going off of technical analysis for quite some time, and I don't see any reason to change that. Just, expecting a little bit of light consolidation. U.S. dollar, take a look at the weekly U.S. dollar. I think is looking less bearish. Okay, this is a weekly chart, and on the weekly time frame, we're still seeing increasing volume on the move lower. So weekly is still saying that the U.S. dollar is bearish. Okay, which again, that doesn't always necessarily mean that a lower dollar is good for stocks, but values and prices change over time. So that's just rent and taxes, inflation. Inflation is something that will never go away. Every 18 years, the value of your dollar, if I have $10,000, 18 years, that's really the same value as $5,000. Okay. So here, U.S. dollars bear flagging. I think what we're seeing now on the daily time frame is it's turning less bearish. Okay, we just broke out of this flag, and this long lower shadow here, declining volume, little bit of on this move lower, it does kind of give me a climaxing feel to it. So I think U.S. dollar's turning less bearish, which is going to speak to the euro, which has just been going crazy to the upside. Here is daily euro, and confirming my thesis here with the U.S. dollar is turning less bearish. This is turning less bullish. This up thrust candle to close the week. Here we had this is if we look back at previous buying climax, that's qualifies on this. That's what volume spread analysis does. Is we look at weakness in the move up. Okay, that to me, this high activity, our institutions are buying into that, or selling rather into that strength. Okay, now this upper shadow is nowhere near the volume amount of these previous. Okay, so it's not going to be the same blow off the top that we had before, but it's significant nonetheless. So that's my thoughts on the euro, the U.S. dollar, treasuries, the yield. I think we pretty much covered everything. Now you can see what I'm trading. I've got trades on individual names and indexes, as well as forex trades that you can find. I'll be putting these images up here shortly. HotStockMarket.com in my trading group. Okay, I got a new thread here. You can check this stuff out, and remember now at the bottom of each one of my trading log threads, I source out information. So if you're scratching your head on what I'm talking about, you can try to do some Google searches, educational sections, and if you can't figure it out from there, I don't know what to tell you. This video is not for you. Okay, so here is a good source of information as well for you Redditeers. Here we have subreddit StockMarket. All right, I'm on there, linking my stuff in there. So that's all I got for a video. You guys, oh, and I think we got a time change coming up here. So yeah, I think Sunday we are going to be moving our clocks forward. All right. Oh boy, I love daylight savings time. Not. Anyway, that's all I got for a video, and we'll see you on the boards.